Hey everybody, good afternoon. It's about 12:30 in the afternoon. It's Monday, the 27th of December, 2021. We've got 4.5 days left in the paper trading. That's our traditional stock market, Nasdaq, S&P 500, and then of course an extra day there on crypto as it's 24/7, 365. And what I'd like to do is I'd like to get a few things out on the table here before we get into the new year. Before I get into any of this, of course, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and move on into the chart. I'm going to start here with Bitcoin today. We're taking a look at Bitcoin. This is on Binance, and there is a particular reason why I am doing this on Binance. So we were just having a little bit of a discussion earlier on the Discord server, and of course, if you need access to our Discord, you can find all that information on BitDoctor.org. But we were talking about Tether. All right, so I just want to say something about Tether. And Binance is a major Tether exchange, and I think there is a lot of proof, to back that up. Bitcoin versus Tether, we've got lots and lots of volume here on the Tether trading pair for Bitcoin in particular. So as of this day, right now, so far, we've got about 20,000 Bitcoin that has been traded on the Tether trading pair. That's a lot of volume. It's a lot of volume. And so the statement was made, all right, well, you know what? When Tether goes bust, Bitcoin's going to basically just fall off a cliff. So let me maybe try and debunk that here for a moment. So what I'm doing is I'm looking at this volume here, which has been tapering off. Okay, so if Tether's volume reduced to almost nothing, and again, if you take a look at the history, we had actually kind of an increase in volume here, all the way through the the capitulation low in March of 2020, right, to our high here. Near the high, we had a big capitulation sell-off, but the volume is decreasing. So as we were going up to our highs, let me just kind of outline this here for a moment. Looking at the average volume right here, all right. So I'm not going to change. Well, let me see here if I can zoom in just a little bit. I don't want the chart to really get too crazy here, because what I'm trying to illustrate is we had a peak here where we had an average volume high, and then we had our low, which we peaked, having an average volume high again. Then we had another peak here where we had an average volume high again. And then the capitulation low, we exceeded the average volume. But when we recovered right here, we had another average volume. It's kind of increasing. And then back here where we had this big push down, we had another, just continuing the rise of the trend. And I think it's pretty clear that you can see that, with the only real exception being this guy right here. Everything else really fell in line. But what have we been seeing basically since we had this, what many are referring to as a low volume run up? Well, that's exactly what it was. It was a low volume run up. And we are just continuing to move down. We had a little bit of support here, and we're talking about moving averages on volume. So take it with a grain of salt. But, we're starting to see there being, resistance in volume. But what is happening right now? Volume is decreasing, but the price is increasing, at least currently. That's what we're seeing right now. Looking at this, we have a decreasing volume, but the price is going up. So is this, a low volume move up to the effect that it's going to, fall? Yeah, actually, I think it is. But the big question is, where is that end going to be? So what I've got here so far, very clear that we finished something here. It ended in really great fashion. We had a nice 1, 2, 3, 4, 5, nice ending diagonal. 1, 2, 3, 4, 5 into an A, and then we had a 5, 3, 5 into the B, which naturally leads me to believe we are going to go down Potentially all the way down here to about 27 to 28,000. It's potentially going to go back down there again. But what's it going to do in the meantime? Well, in my opinion, we've got a wave one. We've got one, two, three, four, big five. So we have an extended fifth into this wave one. Then we have an A, B, C. We should be correcting that move. Okay? So we should be going to, in my opinion, we're going to be going to more than likely the 50. All right? And that 50 is sitting right there at about 54,000. Again, I've been talking about 52 to 54 for probably the better part of 2 weeks now, right? So if you've been watching my videos for any amount of time, you're probably tired of hearing me say that. So I believe that we've got the A, we've got the B, so then we go for the C, which in my opinion is probably going to go to the 50. Not as likely that it's going to go up here to the 618, but it's possible that it could go up to 57. My best guess, we're going to find lots of resistance here in this area, and I'm going to explain why. So right here between the 50 and this level of resistance that I have outlined is likely where we're going to get a rejection on that wave 2, and then we're going to go down for a wave 3, which is probably going to be a little violent. It's going to be very quick. What we've got for confluence there, I'm on the daily chart, daily time frame here, and just to point out that we've got a dominant pivot high, which is what I based most of this off of. Dominant pivot high right here. And then looking, let me just go ahead and mark out that 50 and see what we've got right there. All right, so I've got this whole thing marked out. What do we have? We've got more support here. We've got support here. We've got support here. So you're starting to see signs of, kind of a building case for there to be a rejection in this area. Like, yes, we're long. This is looking good. But I'm cautious between 52 and 54. Right now we're at 51,919. I do believe we are going to see 53,000. Whether or not we get to 54, jury is out. We'll have to take a look at that. So total grasp did mention something. You're looking at Bitcoin volume, got to switch that to dollar volume. I mean, I can do the conversion to dollar volume. I've said that currently we're sitting at about 20,428 Bitcoins that have been traded so far today, and you can multiply that approximately by about 52,000, and you can get how many dollars have been traded. But the point that I'm trying to make here with the volume is if Tether volume does happen to die off, it's been dying off anyway. Where is that volume coming from? Well, it's not coming from exchanges. The price is, heavily being traded by fiat exchanges, meaning like Coinbase or other fiat gateways. It's being traded over the counter. It's being traded in futures, the CME futures. So this volume concept that Tether is going to explode and cause Bitcoin to crash, I mean, I think it could cause something like this, but it's certainly not going to break the bullish structure that we currently have intact on Bitcoin. I'm not going to be doom and gloom, I guess is what I'm trying to say. These trend lines here that I have based on this pitchfork seem to be pretty well intact. And there is a case that we are not going to come all the way down here. If we only came down, if we only came down here, this would be extremely bullish, and this would mean that our upside target is actually much, much higher. Chances are we probably would see prices over 200,000, maybe 250,000, given some time, right? So maybe it comes all the way out here and it breaks off at 200,000, right? I believe that in order for things to look healthy, that sometime in April, we're going to see a move. And again, I talked about April in another video in the past. I'm not going to rehash it all over again. I want to try and keep this as brief as possible, but this is really what I'm looking at on Bitcoin right now. I do expect it is probably going to, see this move down. You can see the weekly is getting close to being oversold. Let me just go ahead and zoom a little bit so we can see this. The weekly, which is the white wave, is getting close to being oversold, but it's not there yet. Right? It's still moving down, even with this move up today and yesterday, it's still moving down, right? Go to the hourly and let's just kind of take a look and see. I bet there's a lot of stuff that's overbought right now. You've got the 1 hour, the 3 hour, and the 12 hour all overbought right now. I still believe that we're probably going to see a move up to this red box, which is where I'd be looking to get out of any long positions that I'm in and look to take a conservative, low leverage short position. Because again, we've had a nice move up here, a move up that we've been talking about for a while. But now that I think we're getting close to finishing this wave C, well, then I think that we're kind of getting to that point where we need to be, getting out of, any long positions, especially if you've got leverage, and then looking to get into a low leverage short position, with the stop loss probably up here at about 57.5. That's kind of what I'm looking at there. So that's my thoughts on Bitcoin. Let's move to the S&P. So let's take a look at our futures here. Again, we've been talking about this for a while as well. Let me remove volume because volume on this is not going to look really fantastic because of the overnight volume being extremely low. But the S&P currently is making all-time highs right now, which everybody is really shocked about. It just so happens I'm not. I'm not surprised at all. Here on the Discord, we went long here because we had a great buy signal here. We went long again because we closed it out here. We captured about 4% or so. We had a little bit of a pullback. We went long again here because I saw, signs of, good divergence. It looked great. We went long again. We closed it off, before we had this huge move up. But we went long again, right? And again, we've since closed that position. But, this doesn't look bearish by any stretch of the imagination, right? So from down here, we've got a 1, 2, 1, 2, 3, 4, 5, and then down here into the 4, 1, 2, 3, 4, 5. So we've got a nice 5-wave structure. It doesn't look fantastic. We had a shallow 2 and a really deep 4, but that's okay. The structure still is sound, which means, it's very likely that we go up higher. And the other reason why I'm not bearish is because of this. Sharp move down, sharp move up. V-shaped recovery. Not to quote, President Trump when we were talking about this last year. It's still last year, right? 2020. They were talking about V-shaped recoveries in the S&P. Basically, that's almost exactly what happened. If we take a look and see what we've got going on back here, big move down, big move up. That's exactly what we're having on lower time frames right now. This is not something that I would be interested in getting into a heavy short position on. Another reason why I don't really want to get into a really heavy short position is because of all of the options interest that we have in the markets right now. So let me just go ahead and put this in here for you guys to take a look at. It's right here. It's clear as day. Let's just take a look at the open interest that we have in options markets. Well, pretty clear. 2.7 million contracts are expiring on Friday. 62% of them are puts. 37% are calls. And if you take a look at what happened last week, 601,000 contracts were open, 62% were bullish, 37% were bearish. So people are starting to figure it out, but it doesn't change the fact that there's a lot of open interest right here that's going to be expiring on Friday. But the big reward is the 21st of January. So just a few short weeks away. Look at this. We've got 4.5 million contracts, 71% are bearish. These options buyers have to lose money. That is just the way that it works. The majority of the time, options buyers lose. And with all of these contracts that are sitting here open, right? And even last week, 54% were open bearish as well. And that was as the price was sitting, doing this V-shaped recovery. So you've got 207,000 contracts that were open for January 21st that were open in this range. That's a lot. Those have to expire worthless. It has to. And really, it's probably only about 100,000 or maybe 110,000 if you take in the ratio. But this looks ripe for continuation to the upside. I would be looking to get into some long positions going into the 21st of January. Before I would be looking into getting really super bearish. Like certainly there are some scalps that can be made And total graphs, great question. Yes, the white wave is the daily. If you need access to our indicator, just go to BitDoctor.org. Make sure you have access to our Discord, which there's a free version for a free membership for you to get access to our Discord, the community area. The white wave is currently not available in the public build. I will be releasing that. I know I've mentioned to a couple of members I wanted to get it released last week. I'm making a couple tweaks to some alerting mechanisms inside of the indicator, so I will be having that released this week. So just be on the lookout for that, because that will be coming. But anyway, open interest on options on SPY in particular, that's what I'm looking at here, are heavily bearish going into January 21st. And honestly, look at this. Already in June, you can see we've got 72% bearish. In February and March, 67 and 74% bearish. These are not signs that tell us that we are going to fall off a cliff. Now, certainly, we've had lots of options buyers that have been losing money left and right trying to get into short positions, but this looks to me like we are going to move sideways and or up here over the next few months. So just keeping an eye on that as we go. Let's take a look at NASDAQ, because NASDAQ is now above my green box. And again, we've been talking about this for quite a while as well. All right, so from the top, we had an ABC, ABC, and then we have a nice little ABC down here as well. Let me go ahead and outline that for us here. So from up here, we've got a nice A, B, C to finish off that move. And likely that probably looks better as a 5-wave structure moving down. But from the bottom, if this is the completion of a WXY, right? So again, bullish from back here. Just look at the indicator. You've got the 1 hour, the 3 hour, and the 12 hour was almost there. And that was basically at the bottom. Basically at the bottom. We had the 1 hour and the 3 hour down here. This is where we were longing SPY, not where we were longing NASDAQ. But you can see the 1 hour and the 3 hour was creating some bullish divergence. The 12 hour was down here as well. Would have been a great place to be buying, and it had a nice big move up. And again, we're seeing a nice move up here. So S&P is making new highs. NASDAQ is not, which is really interesting because NASDAQ has been the stronger index for basically the last almost 2 years now. But now that we're above this level of resistance, this basically had been a hammer for quite some time, right? So starting right here, breakdown, 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 right? So you can see it over and over and over again. But now we're above it, right? So eventually, when you hit a resistance level so much, eventually it's going to break. And that's exactly what's happening here. So for NASDAQ, wouldn't surprise me one bit for us to do a pullback and then a move up to new highs. It wouldn't surprise me one bit. Let's just take a look here and see if I can get open interest on NASDAQ here really quickly for us so that we can see what open interest on NASDAQ looks like. So let's just go ahead, let's go ahead and put this in here and see what we've got from an open interest standpoint on NASDAQ, because this again is just as important as the open interest that we've got on SPY. So looking at this, January 21st, 2.2 million contracts, 66% are bearish. And last week, 56% of the 55,000 contracts are bearish. Now, you're naturally going to have more open interest on SPY than you are on the Qs. People like to play SPY more than like to play the Qs. But the open interest is still there. You've got lots of open interest. And for the end of the year, 805,000, almost 806,000, 60% are bearish. Now, that's not a ratio that's like really, really out there, but it's still quite a bit. Still quite a bit of open interest. What I would be most interested in here is the 66% of the 2.2 million contracts on January 21st that are bearish. I would expect after today, this is probably going to increase. I would expect that more and more people are trying to short this. We're having a little bit of a push up. People are saying, oh, this is going to be a fake out. Now we're going to come back down. Not by Friday. I don't think so. Not a lot, at least. If you're going to get into a short position on NASDAQ, I wouldn't target anywhere below 16,125. This looks good. So, all right, guys. I think I'm going to go ahead and end it right here for right now. I'm going to be doing some analysis on some stocks here in just a little bit. I had a lot of requests on Twitter to do some analysis on some stocks, so I'll be doing that here in just a little bit. But if this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. And if you need access to our Discord, you can find all of the information on bitdoctor.org. And if you'd like to join any of our membership levels, the insured membership has a promo code that is valid through the end of the year for new members, New Year 2022, to get a little bit of a discount on your first month's membership. And of course, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.